Welcome to Monday's Market Outlook here at Wealth Creation Investing. My name is Matthew Buckley. I'm the Chief Investment Strategist here at WCI, and going to be a quiet week as far as macro economic data are concerned. We got existing home sales this morning at 10 a.m. Big swing and a miss as far as existing home sales. 5.08 million. And the previous months were revised down from 5.18 to 5.14, and the market was looking for a huge increase and a swing and a miss. Market kind of taking it in stride. We were down a little bit. Now we're essentially flat. So it's very interesting. I'll talk about that in a second. But as you can see on the flight schedule, not a ton going on this week. We'll get some mortgage information tomorrow with the HPI report that comes out from the FHFA, and it's kind of a Fannie Freddie type of report. And then Richmond Fed, the manufacturing index for that region. On Wednesday, we'll get a flash manufacturing PMI, but also new home sales. Okay, so we got existing home sales, new home sales, getting some mortgage data on Tuesday. Thursday, core durable goods orders and weekly unemployment claims, and obviously regular durable goods orders. And then Friday, potential market moving data out of the University of Michigan. We get consumer sentiment and inflation expectations. But net, this is a relatively light week for economic data. What is going to drive this market this week, for all intents and purposes, is are earnings. Obviously, we get like a Netflix today. We get an Apple tomorrow, which is its own universe. We get some more financials. But net, this week is going to be driven by earnings. But a big miss like that out of existing home sales, I would have thought the market would have taken that as a lump on the chin there. But as I said, the market's kind of turned around here. At least the SPOOs are up, and the Dow's off its, quote, lows of the day, and essentially flat here. Why? Hopium. Folks, the Bernac obviously testified last week in front of Congress. Hey, I strenuously object to what's going on, and we are going to taper. But the market, after hearing his lieutenants run around and tell everybody to calm down, has heard differently. So the biggest news for me, and really scratching my head that the market isn't, lower or didn't kind of implode last week, is really the Detroit bankruptcy, and pretty incredible to me, folks. Did you see the ruling? The judge, she's going to send a copy of the ruling. She essentially is trying to block the bankruptcy and sending a copy of the ruling to the president. Why? Because he said that he was going to save Detroit, or actually he claimed credit for saving Detroit, and he actually didn't. And some of the Sunday talk shows this weekend, the mayor of Detroit talking about, well, there's no federal bailout yet. So they believe that that we are coming. The U.S. taxpayer is coming to bail out a failed city full of promises. To steal somebody's line, the chickens are coming home to roost, folks, in this country. You cannot promise everybody everything and expect to deliver. That's just not going to happen. And hopefully your kids aren't listening to this. There is no Santa Claus. And obviously, you can't run against Santa Claus. You can't get into office by being against Santa Claus. You have to be Santa Claus. So here we are. You can substitute the word, in my opinion, Detroit for the United States of America, because we're already there. Great article on Zero Hedge about everything is fine, but and it goes through a really detailed, from everything's fine, but the City of Detroit just filed bankruptcy. Continuing claims for unemployment spiked to the highest level since 2009. Spending in June at restaurants fell by the most we have seen since February 2008. Google missed, Microsoft missed, Intel missed. Housing starts for June, the lowest that we've seen in a year. Mortgage applications dropped 45% since May. Home ownership rate in America is now at its lowest level in nearly 18 years. Everything's fine, but the United States is losing 500,000 jobs to China every single year. We lost 240,000 full-time jobs last month in June alone. Why? 2 words: Obamacare. Employers are scrambling to boot people from full-time roles and put them on part-time roles so they can be on the government dole now. Isn't that great? Number of full-time workers in the United States is now nearly 6 million below the old record that was set back in 2007. So really good article here on Zero Hedge about, hey, everything's great, right? But it really isn't. 40% of all U.S. workers make less than 20 grand a year. It's incredible. Number of Americans on food stamps has increased by 50%. While this president has been in the White House. We're going to borrow $4 trillion this year that we don't have and can't repay. So it's incredible. And oh, by the way, there's bad stuff going on in Syria, Egypt, Iran still racing to get a bomb, and it's really, really not good. And really, I agree with their bottom line. As a nation, we consume far more wealth than we produce. We buy far more stuff from the rest of the world than they buy from us. Our debt is growing much faster than our economy is. You guys saw a couple weeks ago that huge GDP miss at 1.8%. Folks, we need a 3 in front of that number to even stay alive, and we got 1.8%. And our global GDP, share of global GDP, is an embarrassment. So everything's great, folks. Market keeps going higher. But obviously, we're seeing a lot of revenues misses, even though about 65% of S&P 500 companies that have reported so far have met earnings expectations or beat. We know why, right? The Wall Street game of under-promise and over-deliver. I've covered previously in our sit reps over at Top Gun Options or here at Wealth Creation Investing that we have seen the highest negative pre-announcement ratio since 2001, right? So here's what the Wall Street game is. Run out to a microphone, pre-announce that the world's ending for your company. It's going to be so horrible, earnings, you can't even speak. And then come in with slightly horrible, and then we'll be fine, and the stock will go up, right? So anyway, I got to get going here, folks. Got to get to trading. Good stuff going on. We just knocked out a weekly options live trade brief over at Top Gun Options. Put a Google trade on a couple hours ago. That's already up 50% or $1,100 in a couple hours. That's pretty sweet. And our weekly options model portfolio is up $1,700 alone today on about, let's call it $15,000 in risk. So nice return in the weekly options model portfolio. So I got to run. I'll be back tomorrow with Tuesday's market sit rep over at Top Gun Options. Happy hunting and make sure you hedge. I'll see you.